guys, it is July 1st and a lot of people are going to start on holiday, but wow, what a crazy market. Cannot get a day of break, but that's what makes it fun, I suppose. Past performance, it's not indicative of future returns. And let's take a look at how it's all going right now. Currently, let me hit the refresh on this. This is FinViz, one of my favorite looks, so that you can see it's kind of a weird, kind of neutral day. If we look at the indices, the major market indices, you'll see that they're red, and they've been mostly red for the day. I think maybe they came up to flat. Crude oil's up 2.5%, but let's take a closer look. You've got a really mixed behavior within oil and gas. And that's really strange to me because most of the announcements that came out are highly beneficial to what? Natural resources. Let's talk about that in just a second. I do want to go through the economic data that came out yesterday. The inflation came out more or less as expected. That's the PCE inflation number, which usually just matches more or less what we see in the other SCPI numbers, but it is officially the one that the Fed uses. And then also we had PMI come out more or less what was expected. But like I said, the thing that is really crazy in this marketplace is the sheer raw amount of no one knows. Like, I don't know a better way to say it other than market uncertainty is what the options market is about. And right now it's elevated. And that does mean that even if you love certain companies, you got to take a half a step back. So if you were going to buy it at 60, I would say buy it at 58 now or something like that, because you just got to be really careful in this marketplace. The exception to that is natural resources. With natural resources, eventually people are going to figure out that this is going to be a very aggressive market, in which case, that one, just pick a spot where you think you think Greater Fool will sell it to you and just go ahead and take a position, because that's going to last for a little bit of time. In fact, if we ever do resolve the oil issue, the market will go up anyway. So there is that. Okay, these are the economic data for next week, which means it's a big quiet week, because honestly, even if the PMI final numbers come out, they've already come out today. So it's not like that's new news, but it's Wednesday. So maybe some people are already on vacation. Factory orders isn't going to make a lick of difference in the middle of the summer. And jobless claims will come out. Now we are watching the consumer very closely. 1 week of jobless claims does not labor market indicator create, but right now, because people are so freaked out, because of this inventory issue that is dramatically changed. And I did a bunch of, chatty chats with different friends. And I do think that what Micron reported yesterday is indicative of what other companies are seeing, which is people hit the brakes really aggressively, which was probably more so than the Fed expected when they raised rates. Like, they knew they were going to make a lot of companies hit the brakes, but the manner in which we will see what the Fed thought they were trying to do versus what actually happens in the next month or so. And that means that the earlier warning earning reports that'll come out in July may not be indicative of what we see in August. And that's not fun from a market's perspective, unless you're a day trader or you just love wild volatility. So we're going to have to figure out over the coming weeks how you want to position and trade. And that means tune in, because it will change from day to day. Now, a couple things I just want to mention, and I still have to review all of the food reports, but they did come out more or less than what I expected, but I have to get into the nuanced hairs of that. I do want to talk a little bit about Micron. Okay. Micron is kind of the old school semiconductors. So they are not indicative of every part of the semi space, but they saw weakness coming from mobile and desktop. That does make me pause as relates to Qualcomm, even though with Qualcomm, what's happened is people just realize their chip is the chip. That whole Snapdragon thing is real and really helpful and really vital to where things are going for in the future of IoT. And they had said, Qualcomm, which is a later reporter, had said that, in the world where there's a semi shortage, and not just a semi shortage, but other raw materials are a problem, copper, steel, all that stuff. People are making a call, not just on whether they want to just, stock up on semis in general, but given that there's a certain kind of focus, a certain type of weakness overall across the raw material spectrum, what precise semiconductor do I want to use? And that was their story when we left off with them in the month of June, early June, I think is when they reported, maybe late May, something like that. Okay, so we don't know because there's going to be, because this slowdown, according to Micron, happened very abruptly. Additionally, Micron did blame China a bit for the slowdown, particularly in mobile, because of the lockdowns and things like that affecting things. Now, some analysts did push them and were like, hey, how many quarters do you think that's going to last? And they said, well, if we use history, it typically lasts for 2 quarters. So Micron as a stock right now, pause. I would also, but everyone else, I would say pause as well, because we need at least one more data point, and we'll have that. Texas Instruments is an early reporter, but we got a couple weeks to wait before some of that stuff comes out. But we will start to see what some of the other semiconductors have to say. We've known for a while, by the way, that desktop was going to be weak anyway. That's part of the reason why we took the speedometer off of Best Buy. If anything, if you want it, like, Best Buy's cheap, but at the same time, you got to be kind of careful. So if you're in Best Buy, I would watch it. Additionally, for all of retail, you just got to be very careful through the summer months here, because even if the consumer is fine, what the consumer will decide to spend on, or whether or not they'll just take a break during the summer and spend only on travel, which typically happens in the summer, you got to just kind of watch it. And then how that implicates for the back half of the year is a certain thing. Certainly that bodes poorly for Amazon, but people love to buy Amazon from what I heard yesterday. So that is what it is. But I personally, if Amazon rallies too aggressively into the quarter, will probably be looking to just buy some puts as a long shot on my part. But that's kind of how that's playing out. GM, when they talked about, says unfinished cars will hurt quarterly results. This actually, I think, speaks a little bit to what I was saying about Qualcomm versus Micron. It just depends on what exactly it is that they want to finish off the autos with. Autos, by the way, was strong for Micron, as were data centers, the 2 areas of strength that we saw as well in NVIDIA when they reported. So just realize everybody seems to be reporting about the same thing. It's just the strength and the aggressiveness with which the economy seemed to hit the brake on these companies that happen to have that same kind of, it might be that just the week, and when you market, given when interest rates did what they did, that's what you're seeing. But I wouldn't put high odds on that. The other thing I would mention here is the Supreme Court decision to limit the powers of top environmental regulator EPA to enforce this measure on climate change. This actually directly impacted the states to the extent that they wanted to burn something other than to the extent they wanted to burn fossil fuels to create the utilities for the summer, all this electricity we're going to need, air conditioning, et cetera. So this actually should be very bullish, nat gas, bullish coal. And in some ways, as much as I hate that the utilities might be burning coal this summer to make it through, and then we as a nation might be importing LNG, because that would probably be the right economic decision for us. It's not great, but it is what it is. And the fact that we started this morning off with a sell-off in coal was crazy to me. But this reading, the way that I'm looking at it, should most impact coal, even more so than nat gas, which should get a break as well, because it does indicate that they can probably better understand demand going forward. So that's something to note. And then other than that, that's all I've got for today. Make sure you hedge through the weekend, because July 4th is July 4th, but we still got 2 more weeks before we get to the financials, and it's 50-50 on those. Like, I'm not expecting this amazing quarter from the financials. Any questions?
Jaime, which coal company are you looking into?
I like Consol, and I prefer it if you just buy it versus the options. The options are so damn volatile, and there's not a great way to hedge it, because there's just not a lot. There's like the stock's liquidity is weak to begin with, right? Stock liquidity is weak because this was technically, well, it had to go through reorg, because during the period for which coal, we were so sure we were never using coal again as a nation, it got massively reorged, and there were some labor disputes across the entire industry. During that, so for a long time, this thing was busted as it comes, right? If you look back at the chart, you'll see. But then the most recent year or so, the CEO, it's a turnaround story. So the CEO already started to make great progress with oil at 60, and he basically turned it a certain way. But it's not on most people's radar screens as far as I know, because this really was me researching and giving up that we would ever be able to stabilize the price of oil and doing my own research. I didn't get this from some group of meme people, what I mean? It also doesn't fit the characteristics of a meme stock. So I would prefer if people either purchase this as a stock and hedge using the options market whenever they feel they need to, or just don't hedge it because it's not that expensive of a stock and let it go for a couple years. What's that?
What is the symbol?
Oh, CEIX. Consol Energy.
Okay, 47.30 something. Okay.
Yeah,
Cool.
I mean, it's moved. If you look at the chart, it's high as somewhere closer to 60. But I think if you really are like, no, May, I only trade options, leave me alone, then just make sure to get behind September. Because then you'll at least be well enough behind any kind of earnings announcement. And so you'll get the pop on earnings. But, this market is so stupid right now. Like the idea that it might, the idea that there are days when oil actually trades so aggressively that it kisses 100 when we're in the middle of the worst kind of shortage of natural fossil fuels that I've seen in a while. And we know that Europe, in order to end this conflict, is going to have to burn coal. You know what I'm saying? It's a tough call. It's a tough call, but that's why I would say get behind September, or alternatively, and my preference is people just own the stock so they don't have to absorb a crazy volatility in this thing.
Right. Okay. Next question.
Yeah.
The recession.
Yeah.
How do you explain full employment?
I know. Well, we're at three and change percent right now. And I think people be watching the jobless numbers very closely, which is why usually when they're just kind of like, oh, this is a little market opportunity, I could see much bigger swings on those job numbers than normal, even though, quite frankly, 1 week of job numbers does not an economic indicator make, to be fair, right? But it's really wow. I think what it is people are thinking that some companies are going to announce that they overhired at the same time that other companies are still trying to hire. And if we do actually start to get aggressive slowdowns, because remember, retail only started rehiring in the fourth quarter of last year. And retail is still in many ways recovering after being brutalized in those first few quarters of COVID. Restaurants was absolutely brutalized, but it's just the mix, I think, so we kind of have to see, like, yeah.
So it's possible to have a recession with full employment?
Yeah, it is.
Okay.
It is. And one of the, so it's going to look a little strange, and it's really going to be probably something that the people will write about for a while because it's weird. It's such a weird situation, right? So some of the numbers that typically come out, personal wealth, right? So we did have asset depreciation in a couple of markets, a couple of specific markets, namely crypto, right? So if you think, hey, some people just had, and then you had like a lot of speculative stuff in the equity markets come in quite a lot. You have a 20% decline in the S&P over the first half of the year. So you have a generalized negative wealth effect. Sometimes if that starts to affect consumer credit, that could be a problem. Now, one of the markets that's kind of held us all up is the real estate market. And, we got like, we're right on the, we're like if we were like, if there was a fence, if they were like, which way could it go? It's really 50-50 because it depends on how much the asset depreciation continues, right? And
so
that
you're
will,
talking about real estate being the wealth effect, right?
yeah, because if you think about it, like as long as, so if you think about like, are we over levered? Then you can break it down into, is a given individual over levered? Do you know what I mean?
Yeah, sure.
And mortgage debt sits on a personal person's balance sheet a particular way. So as long as that asset is maintains its value, cool. But if that asset does not maintain its value and a series of things happen subsequent to that, then yeah, you'll get a recession really fast. But so I don't know which way it can go. I do think the one thing that is positive there is that because we have raised rates, we could technically lower them back down. You know what I'm saying? So there's that. But then that has other implications. So it's all, but one thing I would say is that I do think that people that feel that the Fed raised rates too late and that they will, I think that's a misunderstanding of how, I mean, like, I know that they'll probably call me out when this video finally comes out on YouTube and be like, she doesn't know. But the fact is, you know, that's not exactly how it works, you know, for lack of a better way to describe it. I think you're oversimplifying if you think rates up and down impact this type of inflation, given the velocity and given some of the extraneous things that happen. And then given that this is, again, food and energy based. You know what I mean?
Right, right.
I think all of this up and down on interest rates, it doesn't incorporate as well some of the global interconnectivity that's happened. You know, I mean, like, I think that there's an underappreciation of what it means for a China shutdown and then what the timing is of a China shutdown as it trickles through the economy.
Right. I mean, housing got way too expensive. I don't think people are going to freak out and not buy milk if just because their house went down 2%. I mean,
yeah, I mean,
keep up. They live in their house.
Just remember but the rental economy, the rental prices have skyrocketed. Like, you know, it's weird because the indicator is suboptimal for really understanding how to think about it. The way things are estimated are a little bit strange. And real estate is so regional. So when you go to CPI, you'll see only a 5% increase in rental expense, but some markets are not experiencing a 5% change in rent. Like New York City had to actually lower rents by about 30% in some cases synthetically. So even though the apartment REITs such as Avalon Bay, et cetera, showed a occupancy rate that was fairly high and rental rates that were maybe just a small discount, because they were giving free months away of rent, it actually looked cosmetically, it actually was cosmetically better than it should have been. And so because that implied imputed rent, if you annualize it over the year, is significantly lower in something like New York City, bringing the rents back to even 10% or 90% of what it was in 2019 or 80% of what it was is a massive increase for the average person. But New York's always been crazy, but other markets look the same way. Florida looks like that. Arizona looks crazy right now if you look at year over year changes in rental expense. You know, people oftentimes argue that that's the poor way to calculate it, but I've seen people actually argue it in the reverse direction. And I'm just like, I don't agree. You know what I'm saying? So like some people have argued it as if like, oh no, the PCE number is way understating or overstating because they are way overstating what it costs because of the mortgage, et cetera, et cetera, et cetera. And I'm like, no, they're not. You know what I mean? They're actually, if anything, understating what the rental, what in particular markets, the inflation will look like on living expenses as relates to housing.
Right. I think a major cost of being a landlord are the mortgage you're paying, right? And if rates are lower, that
Yeah.
I mean, I don't understand why you're raising rental rates if you're paying less.
Oh, because the demand is crazy. We have a housing shortage. So we're in this really odd predicament that we're in a housing shortage. You know what I mean? Overall, we have a housing shortage, but then even above and beyond that, because raw material costs have increased so dramatically, the replacement cost is very high. Then you've got an increase in labor cost, particularly in the housing market. That labor, I mean, you think about that type of labor that, you know, we have this weird immigration situation going on that's really specifically impacting that industry. Let's start there, right? So now you have to pay a very particular type of wage that's very different. Do you know what I mean? And then even above and beyond that, like your typical handyman in Florida right now, there's so much work that it's like insane. You know, your waiting period, if you actually are willing to pay market for a handyman, is still out of control, you know?
So you're talking about labor supply.
Yeah, real estate costs are driven by both raw material costs and labor. Labor by far is typically the more expensive cost. I'm sorry, labor it depends on the market. Actually, that's totally false. Scratch everything I just said. Labor can be a very big cost if you're so, build costs, that's one thing. Depends what kind of real estate person you are. If you're a developer, the materials cost is usually about a third, the labor is about a third. And then there's a bunch of other costs associated, permitting, et cetera, et cetera, et cetera, right? And it depends how you choose to build and what part of the market you're building, luxury versus, affordable housing or whatever it is. Let's move that to the side. But if we're talking about like maintenance, you're a REIT, you got to pay people to manage the property, maintain the property, lawn care, et cetera, bug spraying, pools, like all that stuff. That's mostly labor at that point.
Gotcha. Okay.
Any other questions? It's such an awkward and weird time. I have no idea which way this market is going to go. I feel like this is like a Netflix commercial special and we just have to stay tuned and see what happens.
Well, look at the VIX. I mean,
yeah,
it's getting
totally
hammered. So, I mean, it's telling you the market wants to go higher.
I know it is. It's driving me crazy too. Cause I'm like, why? Things are really uncertain, but like I want to be like, if somebody were like, May, should I be biased long or short? I'd be like, no, you keep that thing hedged neutral as neutral as you can make
Oh,
it.
sure. Yeah. Hedging.
Yeah. Like, yeah. But the VIX, because the VIX to me is, like, okay, I'll tell you what, like in front of the bank earnings come out. I think I have to take a look, but I think it comes out, it's JP Morgan's usually one of the first. So JP Morgan reports earnings. Oh, look, it's going flat and a positive right now. So JP Morgan reports on July the 14th. If that VIX is anywhere kissing 25, I think you buy callers, long vol and short vol on top of JP Morgan's earnings reports on the 13th. I will have callers on that for sure. It's going to go one direction or the other. Like,
now the VIX, that's a bad quote. It did not go positive.
what's that?
The VIX did not go positive.
No, the thing is bouncing around like crazy. You're not wrong. It's been as high today as 15 and change. And I think it'll probably kiss 14 before it stabilizes somewhere to end us off on the weekend. The VIX has been out of control today. Like, right? Because when I started this, the markets were down 30 basis points and now they're up 15 basis points. Come on, this is a crazy market. These people have lost their mind. Like, you know what I'm saying? This is just trading at this point.
Well, I mean, the first half of this year is the worst since 1970, before you were born. So,
yeah, finally. I feel like a young woman. This is really exciting. Yeah.
okay. Well, have
All
a
right.
great 4th.
Have an amazing weekend. Take care. Bye.